Good morning, everyone. Welcome to the Wavy Tunnel Pro Market Outlook. This is June the 1st, 2026. If you take a moment, please, to read the disclaimer that the presentation is for educational purposes only. And then once that's done, we can move into the events that are going to impact the market this week. And we know what event number one is. There it is. The Iran situation. I forgot. I've lost count of the days now that we're in a blockade. It's over 40, maybe over 50. Anyway, so figures tend to come out. Tweets tend to come out. It's becoming a lot more congested now. It's becoming like the Straits of Hormuz because the market needs some clarity because we can't keep doing this dance. So we'll wait for significant developments in that area. The figures for this week that are important, there's going to be bits and pieces out, but it all happens on Friday with non-farm payroll. And then that will be the major catalyst for the week. I would keep an eye on these auctions that are going to happen this week as well. They also sometimes can have an impact if they move outside the norms that's expected. There'll be a lot of Fed speak. It was interesting that Powell made a speech overnight saying about how they need independence. And I think that was just to have a swipe at the incoming Fed chairman. So we'll leave that there. Earnings this week, I think Broadcom, because everyone's into microchips and IT and AI, we need to have a look and see what happens to Broadcom on Wednesday. So that's going to be the standout one for the week. So we can get rid of that and we can move on to the currencies. And we'll start with the euro. And we can see it's good to get a good look at it in the hourly because you can see how congested and how tight it is. What can I tell you about that chart? Not too much. We are range bound. The market needs direction. We need some clarity on where we're going, what we're going to do, and see if we can get some sort of trend going. This is probably, you've got two things in play here on the euro that stand out to me. So if I look at this, breakout one, and I'm going up there, we've met our objective there. So that was great. The wave and the tunnel did their job. That was all fantastic. We did this consolidation in here where this could catch all of us, and then you got the breakout. So again, if we sort of highlight in the areas where we're having consolidation and congestion, you're looking for breakout trades and you're looking for comfort with the Fibonacci levels. You're looking for tunnels, waves. So you can very, very clearly see where the congestion area was.
Can I just add something after you finish your thought?
Please, just always jump in, Jody.
Okay, so this is a beautiful, beautiful, when we had the lower royal semaphore, the royal cross starts when we get the royal lower semaphore, and then the wave crosses the tunnel, which it did early on. And when you get an upper noble and a lower noble, that's where you need to buy it at the lower noble, looking for that upper royal semaphore to complete the pattern. And we had it. We had royal, and then the wave crossed the tunnel up. That's your royal cross. We got the upper noble, the lower noble where Mark drew his congestion zones, and that's the area where you buy it for that upper royal semaphore, and that's your target.
And that's great. And I'm just adding a little piece while you're talking because I can see something else. And there was your breakout. And what would have happened if I take that out, delete that, and then that would have been your breakout trade. Let me catch it. Oh, I can't move it. Anyway, so that was great. So you've got the wavy tunnel setup. You pulled back into, and what was that, 50%? And then this becomes your breakout trade, which is sooner than the ones that I was sporting, but that would have been a double in one. So all of these would have been, that would have been first entry, retrace. That would have been a profit level. Because if you had put a fib on that, I promise you that would have been 270 over there. And then this would have been another between 38 and 50% retracement. And then that would have been the culmination of and completing of this move, the 1, 2, 3. What did we get there? I don't think there was divergence there. So let me have a look. There was no divergence. So my thinking on this could be that we might have one more go up, because what we can see is that now becomes our one. We currently fighting with the area that I always enjoy as a pullback level, which is this zone here. But this looks flaggy to me, so we need to be careful. So we're gonna need to break above the wave and the tunnel, but the wave has crossed through the tunnel again, which might mean this repaint. But as long as we hold that level there, 115.87, I would be looking for a move up to 117.10.
Can
So
you put the daily chart up when you get a moment
yeah,
so we can see where we are in the bigger picture? Hmm.
so what I would do on this immediately is just frame it out. So you'd probably be looking for a lower noble that doesn't break this royal, and then you might look to go a little bit higher. But this could come down, and then this might repaint. We might be looking at this area here on the daily. But
So
this,
anything on the fundamentals for the dollar? I mean, it's just kind of range bound, isn't it?
it's non-farm payroll on Friday is the biggest one. The problem is there's been a huge shift. And I think this is what's got the market perplexed now, because everyone comes in every day now and is buying the indices. And I know people will say that the indices are not the economy, but within the economy, you're going to have pressure on people, and inflation is going to start to hurt. And I even heard somebody say today that the first move up in interest rates has already been discounted in the market,
Hmm.
which is scary. How can that be discounted with prices at record highs? It doesn't make sense to me.
Yeah.
If I go back to that 15-minute chart, because I would see two things at play, because this is your one, this is your two here now. And what I would be doing on this, I would be looking to see, because this would have been the first impulse lower. And you can see we've extended that target, which was there. But as long as we stay above 115.87 now, I think we could be coming back up to 117. There's pressure on European interest rates to go higher, and that might give it a little bit of support. But trading these on a daily basis at the moment are very, very difficult, because you can see that the price action.
But that's a good call. I mean, that's a good call to see it going higher. And now the question is, okay,
Yeah.
where can the entry be? And from wavy tunnel terms, if you just zoom in a little bit so I can just see the most recent price action. If you get we have a royal and then a red semaphore, royal, blue, blue, red. So I would wait for a lower red semaphore without making a new low. And then when we get some green candles after that lower red, maybe that's the trigger buy.
Yes. The thing that worries me about this is this. We might be doing that. we could just drift. So I would put those lines on your chart and, see how we behave when we come back to, you might get a fill the gap trade before we come lower, but then still not break the low. So there's a few options there. The bungees are in wait and see mode. I think they want to go a little bit higher. This is one, so this might correct all the way back to 116.44. And then we can see that there's a congestion area because that was the breakout. That was the breakout trade. And there it is. So those are the numbers. Order filled. Whoops. I thought I'd closed all my positions.
I'll just pause the recording so you can.
No, don't. No? I'm okay. I'm okay.
You're okay?
Okay. We'll carry on.
Okay.
I didn't know that.
And by the way, if there are any questions as Mark goes along analyzing, please post it in the chat or unmute yourself and ask.
Yeah, because like Jody's doing, this is interactive. So it would be great, if you could just say something or we can get going. So that would be great.
Yeah, and we start out with Forex first and then move into the futures, just so you know.
Yes.
Okay.
So let's have a look now at sterling. Let's go to the hour. And we can see that this is difficult. When you see price action like this, these are the candles that really mess you up. So this is where you've got to be patient in your trading analysis and frame out what you've got. And then, so there was your buffer with the wave and the tunnel. And then there's the breakout, the wave through the tunnel. The problem is you might not have got you've got to leave an order to either sell or you've got to wait for the retouch, and it didn't do that. So this looks, whoops, there we go. No, I don't have to worry about it. So this looks flaggy to me. So again, like the euro, I would expect that this could just drift higher into 134.50 and then give us one more push lower. And I'll give you the target. There's the target. 130, let's call it 134. So now, as long as we stay below that level, we should be going to that. But watch for this gap fill here and then possibly lower. But what you can do is keep an eye on the area now that we are in here. Look for breakout trades. So one of two things are going to happen. You're going to get the red semaphore repainting, or you're going to get its friend. And as long as it doesn't get below there, then we could probably push up higher again. So that's what I would look. The bungees are starting to suggest that could be getting over 50. So that could sort of go up. This one is braced for that last impulse down. So you've got two scenarios here. You've got a trade in here for breakout back up there, or breakdown here, retest lows, and possibly to that level there. So those are the levels that I would be looking at in sterling. Canadian dollar, I don't think has been doing too much. That's an interesting pattern. Let's have a look and see. Looks better. Oh, no, that looks okay. So that level there was a breakout trade for move higher. Can everyone see that? And why did I say that? And you've got another one that could be setting up now. And what is it? It's something similar to this, where you get these rounded bottoms. So you get the smile on the bottom, You've got your previous area of resistance, then that became, that was resistance, that became support, that is now flicked again twice. So I would watch this area in the Canadian dollar, and that will tell you, because then this, you might get a measured move from with this distance here, from here. So 137.69. I can never measure these on here. So that distance there, so 137.70, so 100 points, so 139.70. That's where you should be going. That will be your target if we break this structure here. So this is your pivot point, 138.70. So watch that level. So what you've got to support now, you've got the wave in the tunnel, wave going through the tunnel. This area now becomes your area of support, which coincides with what the breakout levels have been. So that's your first decision, 138.20. Hold that, we go to 138.71. We break that, we go to 139.70. We don't hold the wave in the tunnel. We'll come back down to 137.70. And if we break that, we'll come back down into the higher time frame tunnel. My proxy for the yen. So before we start that, let's have a look and see what's going on. So you can see what's happening here. They've now gone all the way back close to 160 to retest the levels where the intervention came. So you can see here, you can see the patterns. So this probably just will drift higher. And they're probably going to test the resolve of the Bank of Japan to see if they've got an interest to intervene again. Central banks never tell you what they're going to do and when they're going to do it. You get a surprise on the desk when you'll see the line flash and then all panic stations because you have to make them a price. So that's that one. I won't spend time on that one. I'll just go to the Aussie yen and see if there's something there. So again, it shied away from the resistance area. So we can see now clearly. Let's have a look higher time frame and get context. This is a difficult structure. There's your move. That's your first one. So you can see that we could spend a long, long time in this now. And this is the problem with the yen. It trends and then it meanders. And now we're in meandering phase. This is our objective. This is our target. But that is then to assume that we might go through 160. And the Bank of Japan might save his ammunition for a later day and then come in and hit the thing. Don't know. This is probably some fear or some rumors of something happening because that's been the strongest down move that we've had. That was quite an aggressive move, not like these. So these are difficult. And you're going to get into a zone here now where the tunnel is your support. You've come into the gap, and this is your decision point. What are you going to do? So hold this box. We go back to that box, break this box. You come down into a deeper fill the gap, over the higher time frame. You've got there, this whole sequence is done. So we're looking for something fresh. So I'm not even going to guess. So I would say 114 and a half, 114, 14 and a half is your range. Look for setups in that. Let's move on to futures because I think there's quite a I know Kumar's got an interest in in the futures. And so we'll start with the NASDAQ. I know Kumar wants S&P, but let's start with the NASDAQ. Again, all I did with the lines and the outline that we've been seeing is I just extended them because I didn't want to, I wanted to keep all those levels there just to show you how this behaves. And let's bring in the options so we can look at that in conjunction. And to see that this also observes these option areas. This is your critical point now. And you can see how the support area. So there's a lot going on down here between 300 and 350. That is your pivot area in the NASDAQ. I would guess for the next couple of days that we are going to stay above 3,300 and we'll probably trade to 3,600. And I think that's going to be our range. And I think it's going to continue in this fashion. You'll see strong sell-offs, because everyone's buying the dip. And then as it rallies, people get fearful and sell the calls that they bought down here. And so it puts a cap on it. We won't get into discussions about, the move that it's done over the last, and we know it needs to correct. So those are the levels on the NASDAQ.
I just want to make one comment.
Yes.
I'm looking at the four indices together on the 15 minutes.
Right.
The S&P, the NASDAQ, the RTY, and the YM.
Yes.
And what I'm seeing on the 15-minute is that the NQ is doing its own thing. All of the others, the ES, the MY, the RTY, they've sold off. Whereas the NQ found a bottom and it's just beating to the tune of its own rhythm now.
This is where Broadcom comes into play on Wednesday as well, because everyone's just buying these things.
Yeah, exactly. So I just wanted to point that out.
Thank you.
Today there is divergence sort of between the indices. The NQ is doing its own thing. Yeah.
Yeah. Yes. I've just seen something and I just wanted to see if I could, I would just want to measure it because this is an example of what I was talking about earlier on the Canadian dollar. When you get a move like this and you break that level. So you take that. So that was your range. That was your breakout. And then that becomes your target up there. So 3,800. So now, as long as we stay above that level there, which is a long, remember, this is a 4-hour chart. I've changed the chart. So this is now the target, 38.35. So let's just go into the 5 minutes, just for some clarity and just to see what price action.
Can you just go back to the 4-hour for 1 minute? I just want to point something else out.
Yep.
Yeah. So this is very interesting because the wave has cleanly, once it crossed the tunnel, every time price comes back into the wave, we get a red or a blue semaphore. And in this last move up, every time we came into the wave, we got a blue semaphore, and that was buyable until we break down below the wave. We maintain this uptrend until Mark's targets. I think those are, valuable. And then when we break down below the wave, we go down to his lower part of the range, which would be the filter gap trade.
The interesting thing about what you've just said, Jody, you could see that if we even just a 25% retracement of this move, which will be a fill the gap trade, which is 28,788, which probably people are not even dreaming of. They think we've left that one behind.
Yeah, no, we're going to get there at some point because also, if you look left, that's the previous Elliott wave says that when we retrace to the wave 4 of the prior degree.
Yeah.
And that's exactly the wave four of the prior degree, lesser degree.
Right. Right.
It all lines up. So we can go higher first and then come back to it, or we can come back to it on some news, but we most likely will come back to it.
So
Yeah.
something's just happened because I've just heard this market just gap up now.
Okay.
So
Yeah.
I don't know what happened. So this is where you can see this price. It's very difficult to trade this. And this is why I draw these boxes so that you are patient. And that's what I've done. I wait for the market to come to me. And in between here, there's not a lot to do. And you can see already now that we've gone through it, and let's see if this closes inside this box, and then it'll just then try and test the recent highs. So very difficult, very difficult. Let's go to S&P, and you can see a similar rally that we've just had. And this will bear out the point that you've been making, and you can see the price actions very different in the S&P as it is to the Nasdaq. And look at this. How do you trade that? It's very difficult. You know, it grinds, it grinds, it grinds, and then you'll get an impulse. So they're waiting for this news, and until things settle down, everything's in the Nasdaq. Let's have a look and see what's going on with the options in the S&P. And you can see the levels very, very clearly here. So we are trapped. So you got core resistance up here. So 76.30 area should be good resistance. We need to start closing below 75.80. So we need closes below this green area here to push us back into 75.65. Otherwise, we will maintain a level. So this, what we talked about up here, there's not a lot to do because you'd be guessing and trying to wait, look how it reacts, see what the option players are doing. This market is dominated by option players. 65% of the turnover is options. And I think 70% of that is zero DTE. So it's insane. So just be careful, just be mindful. Those are the levels. Gold, there's not a lot to talk about. Everything's holding, everything's as it was. It looks like we're coming back into the wave and the tunnel. So you've got a decision to make at 45.45. But there's a few people out there that are starting to get a little bit bullish again about gold. And what you might be doing is we might be, if I look at this move here, we could extend to 47 again. So basically to come into this area first and see how we pivot around 46.30. Above 46.30, we go to 47. But the first point is here, the wave in the tunnel. The wave's trying to cross through the tunnel. So there's nothing to do until we see how it behaves in this area here. And again, you can see if we break this level here at 45.42, we're going to go up $60, which is 46, which is exactly to that box again. So measure these moves, measure the moves. Look at the tunnel, look at the wave, look at the price action, look at the bungees, look at everything. You can also do your fib on here. I need to just change to a retracement so it looks different. So we can see that level there is about a 50% retracement of that move down there. And then if we break this box, then we are targeting this area down here, 44.35. What does that coincide with? The breakout there. Always look left on your chart. Oil. Oil's difficult because obviously it's susceptible. So the news that must have come out must have been something. So Trump gives positive news on the war, and then the Iranians come out and go, "No, we're not doing anything until Israelis pull out of Beirut, this, that, and the next." So this is why you get these moves because you get a positive tweet, you get a negative tweet, and that's what it is. There's nothing to do. Stay out of it. Um, just a last look at the euro and everything. All the levels are still intact. Everything's still okay. But we went through that in more detail there. I think there was a lady I can't remember her name, that was looking at this. So this one can come out. So we trapped 16, 17 range on euro. Breakout, go there, breakout, go there. Simple. That's it. Any questions? Anybody got anything for anything?
Now's your chance.
Now's your chance. Come up. You happy? So thanks, Jody. Sorry,
Yeah.
it's not very insightful, but it's so difficult at the moment.
Yes, no, that's fine. That's fine. Oh, Kumar's asking for pound yen.
um right. Let me just get that up quickly. Um, pound yen. You must remember that the yen here you've got two weak ones because sterling is weakish and yen is weakish. They're both weak because of different issues. So this is a difficult one. So you can see how the grind has not. So you remember in Aussie yen and how we were getting close to the top, and you can see that this one is laboring, but you can see it's pushing up. So the sterling is stronger than the yen at the moment. So let's go and drill down and see if anything's jumping off the screen at us. Looks like everything extends beyond levels that it should. Um, and it looks like retracements are deeper than they should be on everything here. So I would probably be looking to see how we behave right now with this blue semaphore. Let's see if we can get a friend down here close to the tunnel. So we're in a decision point now. Are we going to, is this a one and then this becomes a two and we come down into, the higher time frame tunnel? I'm not sure. If I did this, I would be looking for a deeper retracement because I've just said they're like deep retracements, which would coincide with 50%, which is this area here. And there's your target up here. So your decision points are, if we break the trend line, then we could extend back to the highs. If the trend line holds, we're going to look for a lower blue, and then we might get the reds that come into play for a slightly bigger move. Fill the gap held, but you see how it extended. Sometimes it's tricky for me. I'm trying to study the price action when I don't follow certain pairs. Do you see anything, Jody? So that's interesting there. You see there. So watch this level here on the 5 minute. There, that number there, 214.80. You break 214.80, we're going to go up about 60 points. And where does that? Into that target there.
Yeah, I don't see much more than that.
Yeah. So I would watch that level there, 214.80. If we hold that, then we're going to stay between 1450 and 1480. Above 1480, we come into this zone close to 215 and slightly above. If we hold that, then that becomes your broader range. Cool. Any more for any more?
Well, all right then. Thank you so much, Mark. This was
No,
great.
thank you. I won't do another one tomorrow because I'll wait till Wednesday. I'll do another one on Wednesday. And depending on what Broadcom does, maybe it's worthwhile doing one on Thursday and then until next Monday.
Very good. And I'll get this posted. Thank you. Thank you.
Thank you, guys.